Hi there, my name is David Teague. I tutor college accounting, and this channel is for college students taking accounting classes. So if that's you, you're in the right place. I'm going to treat this video just like I am your tutor, but if you want to personally tutor with me, just email me at the email on the screen or in the description, and we can set up a free session to figure out if it'll work. This video is meant to help you identify which accounts go where. So what is a liability? What's an asset? What makes a revenue or an expense, to kind of know which box all of these things go in. And this helps with making financial statements, doing journal entries, analyzing things on the accounting equation. It helps with the entire financial accounting course that you're probably taking. So let's dive in and get started. Okay, so I've put myself in the corner of the screen so I'm out of the way, and what we'll do is we will just write out all of the financial statements, or at least 3 of them, as equations. So we're going to have the balance sheet, which is governed by the equation assets equals liabilities plus stockholders' equity. And then we have the retained earnings statement, which is beginning retained earnings plus net income minus dividends equals ending retained earnings. And then we'll write out the income statement under that and say that it's revenues minus expenses equals net income. So I am abbreviating, I apologize, I have to do it, but these are the 3 financial statements. There's also the cash flow statement, but a lot of times students don't have to worry about that one at the beginning of the semester. So if you're looking for videos about that statement specifically, they're going to be coming out after this video. So they could already be out by the time you're watching this. So just look for the playlist on the cash flow statement. You might also know with your professor, your class, that revenues can also be paired with gains. So technically it's revenues and gains minus expenses and losses. But again, a lot of times in the early part of the book, we don't worry about gains and losses. So let's carry on. So stockholders' equity, there are only 2 main pieces that go in there. It's going to be common stock and retained earnings. And I'm going to say ending retained earnings specifically, because sometimes students put the beginning retained earnings in that section, and that's not good. It has to be as of the end of the period. And common stock, maybe your professor also adds in something like additional paid-in capital at this point in the chapter, or at this point in the book. If not, it'll come later when we dive into stock more in depth. So these are the 3 statements. Now, where do things go in here, though? That's the question. So first of all, let's start with the revenues. Did you know that all revenues actually self-identify as revenue? Service revenue, interest revenue, rent revenue, any revenue, it's going to say revenue. With one exception, sometimes you'll see sales, but even sales, half the time, say sales revenue. So that is what it is. Now there's one account we have to watch out for, and that is unearned revenue. So I'm going to add that up here by liabilities so that we know unearned revenue specifically is a liability. So there is that one that sort of sticks out. But every revenue that you see will say revenue. So you're not going to put assets in there by accident because they don't say revenue. And then the same is true with expenses, where if it's an expense, it will say expense. Salary expense, supplies expense, insurance expense, rent expense, all the expenses say expenses, with one big exception, and that is cost of goods sold or cost of services sold, something like that. That's a big expense that does not say expense. And of course there's one that sticks out, and that is prepaid expenses are assets. So you have to watch out for those as well if you see them. Those are not expenses. So prepaid insurance is not insurance expense. Those are different things. So revenues and expenses you can always find because they basically tell you what they are, and that's super helpful. And so next we can talk about the retained earnings statement. Beginning retained earnings is always given. It's going to be in a box somewhere as of December 31st of the previous year. Retained earnings was whatever. It'll tell you how it started. And then net income, we are calculating net income. So that is going to come from our previous statement, which is why we do the income statement first, then the retained earnings statement. Dividends given, you're going to be told what dividends is. You don't have to calculate that. I mean, you could have to calculate it, don't get me wrong. Like in algebra, you might have to solve for it and using this equation, but basically if you're making this statement or you're trying to figure out where dividends go, it's in this statement and it's fairly straightforward. It's just given. And then the ending balance is calculated. And then this ending retained earnings is the retained earnings that goes in the stockholders' equity statement. So that's how the income statement is connected to the balance sheet, is through retained earnings. And then we've got common stock as far as like what accounts go where. Common stock is just an account. It goes right there. Same with its additional paid-in capital, which if you do have that in your class, I'm not going to get into the details about it, but that would also go there with common stock. And that's it for stockholders' equity. There's nothing else to it. Payables are liabilities. So key word here, payable. Every single liability says payable. If it does not say payable, it is not a liability, unless it's unearned revenue. That's the one exception. You've got notes payable, accounts payable, interest payable, salary payable. You could have any kind of payable. That's a debt, it's a liability, it's going to say payable. So that leaves us with one more category, and that's assets. And these are usually you can usually see what these are. If I asked you resources, make sure I spell that right. Oh boy. Resources are easy to pick out. If I asked you, is land a resource? You're going to say, yes, land is a resource because it's valuable. It's an asset to the company. Cash, accounts receivable, supplies, prepaid expenses, land, equipment, machinery, a truck. These are all things that are valuable for the company. They are economic resources that have future benefit. So generally speaking, students don't have trouble picking out an asset. What they'll have trouble with is figuring out where to put them. So they'll put accounts receivable in the revenue section, or they'll put sales revenue in the assets section on the balance sheet. That's no good. This is where they all go. You will never put a revenue anywhere else but right there in the income statement. And you will never put dividends in stockholders' equity because they only go on the retained earnings statement. So this is where they go. And this is how the balance sheet, retained earnings statement, and income statement are structured. So you actually can see using these equations how the statements are structured. But I'll have another video about how to fill out a statement or how to structure a statement on blank paper using these equations if you have to. But as far as what's going to increase assets or decrease liabilities, things like that, it's important to know what accounts fall into these various categories. So there you have it. Okay, so one last thing I want to do is rewrite this in a way that might help a little bit. Okay, so I've erased everything. Now here's what I want you to also see is that inside of stockholders' equity, you're going to have two big things basically. You've got common stock and retained earnings. And inside of retained earnings, you've got the net income and the dividends. And inside of net income, you've got the revenues and the expenses. And so what we can see here in a different way is how the income statement then moves into the retained earnings statement and how that ultimately ends up flowing into the balance sheet this way. But all these accounts here are equity accounts, but you don't see them all in the stockholders' equity section. They're seen on different statements. The only ones you'll see on the balance sheet are common stock and retained earnings, but it's all packed in there. So this is something I might refer to in other videos as the SE tree, and it shows all the things that are connected in there. So that's how I'll end this video. Leave a comment if you have any questions. Look at my other videos, and if you want me to tutor you specifically, answer your questions and help you with your class and your assignments, please email me so we can set up a tutoring session as soon as possible. And I will see you in the next video. Thank you so much.